Good morning, folks. This is Andy Pedraza with Special Effects Academy. It is 8 a.m. sharp, and we'll be getting started in a couple of minutes. I see people joining. I'm going to wait another couple of minutes for any late joiners, and then we'll quickly get started. Thank you very much. Okay, folks, thank you for your patience. Again, this is Andy Pedraza with Special Effects Academy. We are a trading company for Forex traders primarily, though we do our education really serves across any kind of market, but our focus is on the Forex. This is our trading room. We're going to be trading the non-farm payroll coming out of the U.S., one of the major fundamental announcements that happens every month, the first Friday of the month at 8:30 a.m. U.S. Eastern Time, so in about 28 minutes. We're going to be looking at possible entries. We're going to be looking at what the non-farm payroll is very quickly in the 28 minutes we have until the announcement. And we're going to see what trades we can identify both before the actual announcement based on what we think is going to happen, as well as some setups that can be happening afterward in case there is a sharp movement. We will try to trade a retrace, which very often happens after a sharp correction. So thank you for joining us this morning. If any of you has any questions along the way, you will find that you are able to mute and unmute yourself, so feel free to jump in. We're very informal. This is a trading room. Imagine that we're all in the same room looking at our screens and chit-chatting with each other. So feel free to jump in at any time. And before we start, and if my screen actually, there we go. Before we start, I want to quickly cover a disclaimer. All trading carries risk, including risk of total loss of your funds. Never trade with money you cannot afford to lose. We are not licensed financial advisors, and all information provided by Special Effects Academy is for educational purposes only. You and only you are responsible for any losses incurred as a result of trading. So that is a standard disclaimer you've probably seen before on many trading websites and services. And with that being said, I am going to share my trading console. So bear with me one second while I flip screens here. While we talk about what the NFP is or is going to do. So the non-farm payroll is a report coming out of the U.S. Labor Department that tells us how many jobs were created, non-agricultural jobs, that's why it's called non-farm. How many non-agricultural jobs were created the prior month. So the number that's going to be reported today is the number for January of 2018. The market has some expectations, as well as the fact that the dollar itself is under a certain amount of stress. So right now we have some data that we can point to, and what the data is telling us is that last month the report was 148,000 jobs added, which was much worse than the expectations. So the dollar has been in a bit of a weakness since last month, not just for that reason alone, but for other global and local reasons that we're not really going to cover here. But the dollar right now is in a period of weakness against most of the other currencies. The expectation is that we will have a report of 180,000 non-farm jobs created in January. That is what the market is expecting. It's what's called a consensus expectation. If we have a better than that number, than the expected 180,000, we can expect to see the dollar strengthening, sometimes abruptly. It depends on how much better the report is. And of course, if it does come out worse, then we will have the dollar weakening even further against most of the currencies. So what we're going to do is look at the, I usually try to trade the non-farm payroll with a certain small number of currency pairs. The Euro USD is one that tends to move very swiftly whenever there's a dollar weakness, dollar strength. It's one of the main movers. The pound dollar is another one that can show some sharp movement. USD Canadian, and where are you? Bear with me. Oh, yes, the USD JPY. So those four currency pairs are the ones we're going to focus on. You may have a preference based on what you normally trade. I would stick with my preference. It really doesn't matter which dollar pair you choose to trade, or if you're outside the U.S., you can trade the U.S. dollar directly. You don't need to trade a specific pair. In the U.S., we're not allowed to trade the U.S. dollar directly. We always have to trade with a pair. If you're trading the U.S. dollar directly, well, of course, if it's strengthening, it's going to go up. If it's weakening, it's going to go down. The dollar, as I said, is weak right now against most currencies. It's actually been strengthening against the Japanese yen for the past, I'd say, couple of days. You see this uptick is a dollar strength. With the euro, you see quite the opposite. It has been trending upwards. This is dollar weakness, as it requires more dollars per euro. And it's very near a ceiling, a recent high that it created back around, I'd say a week ago, around the 25th of January. We have that ceiling at 125.37.6. This is going to be a very good pair to trade in the sense that it's already poised right at the tipping point. If the report comes out unfavorable to the U.S., less than the 180,000 jobs, or in fact, if it even comes right at the 180,000 jobs, I would expect this pair to go up. If the opposite, of course, it goes down. And we're going to be looking at some setups that we can put in place before the actual announcement to take advantage of a move regardless of in which direction this ends up going. The pound dollar is pretty much the same. You can see a dollar weakening since the 30th of the month, so a few days ago. It started weakening again and is also near its recent high, which is at 143.45. The USD JPY, as I said earlier, has been doing the opposite. This pair has USD on the left-hand side of the pair, so it behaves the opposite of the pairs we just looked at. The more it goes up, the stronger the dollar is, and if it goes down, it is a weaker dollar. So this has been going counter to the trend, and it is not that far from its bottom. It's about 100 and something pips from the bottom based on this dashed line that you see right here. If the dollar weakens, this is going to be a pair that's going to move rapidly to pierce that bottom. So this is another very good trading opportunity. And last but not least, the USD CAD has also been a pair that has gone slightly towards dollar strength. This is a very minor move here. It's basically been bouncing around. In general, the USD Canadian has, the Canadian dollar, I'm sorry, has been strengthening. So this movement downward from the top is Canadian strength against the dollar. And it is also poised to continue going down. It's very close to its bottom. So those are the four pairs we're going to be concentrating on. What we like to do in these cases is set up a few trades that are going to take us in automatically if certain conditions are met. We will not be placing them yet because I don't want to risk being taken into a trade early in case that it moves before the announcement for whatever reason. I'd rather wait about 2 to 3 minutes before the actual announcement comes out, look at where these levels are, and then put in pending orders around the actual price. So I'm going to put a pending buy about 20 pips above where it is right now, and a pending sell about 20 pips below where the pair is trading. That way, no matter which way it moves, it will take me in if there is a sharp enough move, and I will just simply be carried along with the actual trade. I will also use a trailing stop so that in case we have a lot of whiplash, I capture as many pips as I can. So we're going to cover a little bit of how to set these up. I assume that all you guys are familiar with your trading consoles based on whatever broker you're using, and you'll be able to set these orders up. But if you have any questions, any comments, anything at all, we have a few minutes here that we can discuss before we need to start taking action. So anybody has anything they want to say, and now is the time. Come on, guys, give me something. Somebody at least introduce yourselves and then tell me if you traded a non-farm payroll before, if you've had good results. Let's spend a couple of minutes just getting to know each other. For those that joined late, I am Andy Pedraza with Special Effects Academy, and you're in our Forex trading room where we're going to be trading the non-farm payroll out of the U.S. in just a few minutes. Tough crowd today. Okay, I'm going to be looking at this chart here. Let's actually go to the Euro USD. So we can see it's trading at 124.91.8. If we get a very good announcement in the sense that the dollar, the non-farm payroll is at or above 180,000 jobs created for January, this pair should be dropping. Depending how good that announcement is, it will drop quicker or slower. I would not expect it to drop below this horizontal support level at 123. So that gives us about 200 pips of action. So if we're going to put in a trade here, of course, it is up to you to manage your risk. How many, what lot size you're going to be using. I'm going to give you my trade entry, but I cannot be trading for you. So you should use your own equity management rules, your own risk management, your stops, your limit. Everything is going to be based on what you expect to to gain, as well as how you manage your accounts. But for the Euro USD, it is trading at 124.92 right now. I'm going to put in a pending order. I'm going to be using a buy limit, actually a buy stop. My price is going to be 20 pips above current action, so let's hold that 125.15 to give it a little bit of room. I'm going to put a stop loss about 30 pips below that entry. So 124.85. That is what I'm willing to risk. I'm not even going to put a take profit because I am going to add a trailing stop so that this stop will automatically move. I'm going to be placing this. And you can see the pending order being registered on the screen. If it hits this green line, it is going to automatically buy. My stop loss is going to be a little bit below where it is right now. And in my case, I'm going to right click and I'm going to add a trailing stop at 150, I'm sorry, at 15 pips. This is 150 points, but that translates to 15 pips. So I want to be following this once it starts moving 15 pips behind. That will not do anything initially. It has to move at least 15 pips in my favor before that gets executed. Does everybody know how to place a pending order the way I just did? Does anybody need any help figuring anything out in the few minutes we have left? Okay, I'm going to assume silence is that everybody's happy with it. Now, what I've covered here is what will happen if the report is negative for the dollar. If it is negative for the dollar, if it comes in below the 180, especially if it comes in significantly below, this pair is going to go up. But what happens if the opposite occurs and the dollar strengthens? So I'm going to put in another trade, also a pending order. And this one is going to be a sell limit. No, actually it's a sell stop as well. And it's going to be the same 20 pips, but this time below the current price. I'm going to place it at 124.70. My stop loss, I'm going to place it about the same 20 pips above my entry. So it's going to be, I'm going to give it a little bit more room as I did with the other one. So about 5 pips above where it's currently at. No limit. I'm not going to have a take profit. And I am going to hit the execute. And you can see that now I have what looks like a collar around the current price. If it goes up, I buy. If it goes down, I sell. I am also going to right click and add the same trailing stop at 150 points. That's 15 pips. So that as it moves, I don't need to worry about it. If it drops, I get taken in, and then my stop continues following this 15 pips behind until it decides to stop moving down, reverses 50 pips, takes me out of profit. What are the risks here? I can have a very whippy market in that it goes up only slightly, then goes down only slightly, and goes back up and starts doing that little whiplash and actually takes me out at a loss on both trades. That is the nature of trading, folks. That cannot be avoided. Every now and then that is going to happen to us, which is why my risk has been limited here to about 25 pips on each side of the trade. Now, I did not put a one cancels another trade, as some of you may have noticed if you have a little bit more experience with this. If I did a one cancels the other, then only one of these two could ever be executed. But I don't want that in this case, because sometimes it does go up and then it suddenly quickly reverses and goes down. If I have the option to make profit on both ends of this trade, I'll happily take it. So I am not worried about both trades being executed. If that's the case, that is my plan. Now you can see that this pair has already started rising a little bit in the past few minutes. This is based on market expectations. So the market is very slowly moving into further dollar weakness, and this is moving accordingly. If it starts getting too close to my entry before the 8:30 announcement time, I will move these entry prices so that I'm still about 20 pips away. And we can do this for any other pair. And while we have the time, we're going to do that. So the dollar yen is trading at 109.90. I'm going to do the exact same thing here. I'm going to place a pending order. It is going to be a buy limit. My price is going to be 110.20. Actually 110.10. So I'm going to be 20 pips above the current price. Let's give it 110.15 and give it a little bit more breathing room. My stop loss is going to be right around where it is right now. So 109, let's call it 95. I am not going to have any take profit, again, because I am going to be placing, and I'm sorry, this should be a buy stop. A buy stop on, it's at 109.93. I've got 109.15. Always measure twice, cut once. So I'm just making sure that I'm happy with everything I have here, and I'm going to place that order. You will see all these pending orders start accumulating here at the bottom of my screen, and I'm going to do the same thing I did with the other ones. A trailing stop at 150 points equal to 15 pips. And you can see that I have the trade lines. The green line is my entry if it goes up, and the red line is my stop. And I'm going to do the opposite order here as well. It's going to be a sell stop. And I'm going to go in 20 pips below current price. And my stop loss is going to be right about where it is right now. No limit. I'm just going to let it ride as far as it wants to go. And again, measure twice, cut once. I'm just making sure that I'm happy with what I told it to do. I am placing that order. And I am adding my trailing stop. So I'm risking a very small number of pips so far, but I'm giving this room that my profits can significantly outweigh any sort of risk I'm taking. The other thing you guys need to know when trading one of these fundamental announcements is that we have a very good chance that nothing much will happen. The announcement may come out. It may tell us that it's 185,000 jobs created, which is pretty much in line with the expectations. And the dollar pairs just don't move significantly. They may go up 20 pips, down 20 pips, but don't do nothing much after that. That is a possibility, which means that we wasted about an hour of our time trying to trade it. But when the opposite happens, when these things move quickly and move a significant number of pips, one of these fundamental announcements can basically make your trading month. I've captured up to 2,000 pips in a single fundamental announcement within an hour of the announcement coming out. 2,000 pips trading at full lot sizes is $20,000. That is a good day any day for any trader. This account that you're looking at is a demo account that we set up specifically for our Forex trading room, and we're trading at much lower lot sizes. But you guys, of course, trade at whatever size you want, and in our personal trading accounts, we do trade at the higher lots. Gus, I see you have your hand raised. You can unmute yourself and speak up.
Hello, Andy.
Hey, how are you?
Andy, hi. Yeah, good to speak to you, finally.
Likewise.
I don't know if I'm being really stupid, it's quite possible, but I haven't used Zoom before, and I can't figure out how to type a message or a question to you.
I'm sorry, you broke up there at the end. You haven't figured out how to do what?
How to type a message or a question in using Zoom.
Oh, well, I don't have it set up for that because basically I allowed everybody to unmute themselves and ask whatever they want live. So feel free to ask whatever question you have at any point.
Okay, well, we're getting right up to the time now. My question really was, what I often think about is, well, when it comes to these fundamentals, I say because of currency's strengths and trends and what the technicals are looking like, I say, well, I only want to trade this one way. So if the figure's good, I want to trade it. If it's not, I don't think there's going to be a great response, so I don't want to trade it. Is that something you ever do? Do you think like that as well?
Absolutely. There are some fundamentals that I just won't trade because they're a little bit wishy-washy, or ahead of the announcement, I don't think there's going to be much movement. And if I just don't want to be bothered, I leave them alone. The non-farm payroll is one that a few times a year moves 200 or 300 pips at a go. And this is a particularly good nexus for it to do that because the dollar is already in a very battered scenario. It's weak against everybody else, except the yen for some weird reason. The yen has been retracing towards yen weakness or dollar strength, whichever way you want to look at it. I also do not always do what I'm doing this morning, which is to do a collar without any one cancels the other. So I'm willing to trade it in both directions if there is a massive movement and then a massive retrace. So every fundamental is different. And if you join me in future trading rooms for fundamentals, you'll see that I do not do the exact same thing every time. It is a case by case.
Yeah. I was just, I guess I was also saying, do you often choose just to trade in one direction? So you'll say, well, if it's a bad figure, I don't think there's going to be a big response because the dollar's already so weak it's not going to make much difference. Or so I only want to be buying it if it's a good figure, for example.
Yes, that happens quite frequently. In some cases, this has started moving. So the announcement has come out. You can see that I've already been taken into one of my trades, two of my trades now. and we'll see how far they move. Again, this has the option of going against me. It's right there on the line right now. And once I see what it's doing, I may opt to cancel the other two trades. But right now, I am still willing to let them run and see exactly what they do.
Yes, we got good figures.
Yes, we did. So we got good figures, but remember that the U.S. dollar is still in a period of weakness. So even good figures may not move it much. Actually, I would have been much happier with a bad figure because that would have crashed it. So this may be one of those where we don't see much gain, but it is too soon to tell. So we're just gonna let it play out and see exactly what it does. So we had 200,000 was the actual number that came out. So that is about 20,000 jobs better than the expectations. And we can already see the pairs moving. So we're going to let them run at least another 10 minutes to see exactly what they're trying to do. The Japanese yen is right at that cusp. It's actually pierced one of the channels it had been following. You can see that now by both of my trades. Ignore the first trade. That's an open trade we had from last night in our trading room, which has already about 40 pips worth of advantage. The other ones are moving about 5 pips so far, 10 pips. Okay, so this is starting to move. We're just going to monitor this situation. At some point, now that I know that the direction is up and it doesn't seem to be in any hurry to do a retrace, I will start considering canceling the opposite trades, the ones for dollar weakness. As you can see, it is holding momentum, so it's still moving in the directions that our two trades, our two dollar strength trades took us in. And we're pretty close. Actually, yes, my stop loss on one of them has already adjusted. My trailing stop is kicked in. I'm already slightly locking in profit, minimal, like half a pip. But that's already, this is now a trade that cannot produce a loss for me. At worst, I'll be taking out a break even. The other one has still not crossed that threshold. The Euro USD has not had that significant a move. You can see that it has dropped. It's this longer candle here. And let's zoom that in so we can get a better view of what it's doing. So we have this bearish candle that has gone down and retraced already a little bit. Very different from what we're seeing with the USD JPY, where there hasn't been that much of a retrace. And it has pierced the resistance lines that it had. So at this point, we just continue to monitor.
Hi, Andy.
Yes.
Andy, yeah, I think I did the same as you there, in that I placed the two orders with 15 pip trailing stops, and I got taken in on all of them, and they've all closed out on profit really quickly. On quite small profit, which is no bad thing, but I don't know if I'm using ETX spread betting account out of London, so I don't know if there was a bit more volatility on the first move there, so there was some kind of retracement that closed me out on the trailing stop there. but I made a profit on all the trades I entered, but got taken out really quickly.
Okay, that is a little bit odd because as you can see from the screen, there hasn't been any significant retracement. So I'd have to, if you want later on, you can show me your trading screen and I can try and figure out what happened. But for example, if you look at the JPY, it has not retraced more than a pip, if that. It's been simply going straight in one direction. If you have been following at 15 pips, it wouldn't have gone anywhere near your taking you out with a stop. And of course, it shouldn't have taken you out at profit because we did not put any limits in, correct?
No, I didn't. No, I didn't put any limits in either. Yeah, it's very strange. I'm looking at the minute charts here, and it doesn't seem to. There doesn't seem to have been any significant spikes or retracements that would have done that. It could just be the old story of dodgy brokers doing dodgy things.
Yeah, if you look at the 5 minutes, you can see it even more clearly that it's just gone in one direction and it's only now starting to retrace. Both of my trades are now at the trailing stop is kicked in on both of them. So basically, I'm at a point where I cannot lose. Now, it hasn't moved to any significant degree. And as you can see, this one, the one in red right now, is within 10 pips, less than 10 pips of taking me out. That's why it's now showing red. So the retrace is happening. That means the market isn't really convinced. One of them already took me out, like you, at a small profit. Obviously, what we were looking for here is for this thing to have moved 100 pips so that we could have captured 80-something pips at least. But that did not happen in this non-farm payroll. I've traded others that have gone up 100, 200, even 300 pips within minutes. So now I have another choice. I've been taken out at small profit on both of the positions. Now I have to decide whether the market simply has decided that there is no dollar strength. It just moved up on very short-term sentiment and is now starting to trend down. Since I haven't lost anything yet, I got taken out at profit, I'm going to leave these two open and see what happens in the next 10, 15 minutes. If it starts going down to the point where I'm peaking in, it may end up giving me some profit on the other end of the trade. So we'll just see what it continues doing. So this one wasn't one of those big movers, unfortunately, but we can never know ahead of time which one is going to be the big one. So I will always be trading the non-farm payroll. This is one that I'll make a point every first Friday of the month. I'm going to be doing not necessarily the same strategy I use today, but I'm going to be trading it whichever way makes the most sense for that particular month.
Yeah, Andy, depending on how this plays out and whether this strength gets taken forward or it all gets pulled back, do you think that's telling you anything very useful about what the market thinks about the dollar, and if the dollar is ready to start rallying yet or not, or if it still needs to see more weakness?
No, definitely more weakness ahead. I don't see anything bullish for the dollar in the next week or two, barring any unforeseen events coming out of the U.S., Europe, or wherever that would make it strengthen against another currency. So the entire world is very bearish on the dollar right now. And what we're seeing is some of that. So the market initially moved bullish on the dollar. For a very short period, it ran out of steam very quickly. So the market is not convinced that this means dollar strength. In fact, I would expect the rest of the day to be a retracement to the prior level. So we have our We have our sell stop down here at 109.70, and it's currently about 50 pips. I don't know what it's going to do in the next 50 minutes. Like I said, I'll monitor it. If I see any sharp movement, I may even adjust this further up to be taken in early, but I doubt it. This is one of those that since it didn't move quick enough, I'm just going to leave it be and wait the extra 15 minutes to see what it does. But if you want my prediction, and I hate predicting because there is no such thing in the markets, I would say not to expect dollar strength in the near future. Quite the opposite. You're going to see the euro continuing to strengthen. You're going to see the dollar either trading sideways or trending lower into weakness. The Japanese yen is also trending sideways. I think the New Zealand dollar has a good chance of trading towards strength. So trading the Kiwi dollar would be trading up. The NZD USD would be trading higher, but not necessarily today. Today is market close. I won't expect any major moves to happen until next week. Euro Canadian, this is the trade we entered last night, is already more than 50 pips up. That's the one active trade you see on your screens right now. This wasn't based on any fundamental. It was just pure technical analysis, and we alerted this one around 8 p.m. last night, and it's already at profit. I'll decide towards the end of the day whether to close it. So this is the USD JPY. I'm going to return to my hour view. And as you can see from the hourly candle, the retrace doesn't look as extreme. It's just hanging out there. The Euro USD on the same 1 hour does show a much longer wick. So the euro against the dollar, there was much more disbelief on the European front on whether this meant dollar strength. So it strengthened momentarily and is now retracing back up. Our entry in the other direction is up here at 125.14. Again, I'm just going to leave these alone. They do have about 50 pips both of movement, and Fridays are usually a good day for a retrace. So I'm not going to cancel these just yet. I'm going to leave them be. Let's take a look at what the at the cable, the dollar pound. So on the pound dollar rather, GBP USD, we can see that it did strengthen significantly and hasn't retraced all that much. So it's doing about the same thing that the USD JPY is doing. If we look at a 5-minute chart just to see exactly how it's been doing that movement. We can see that it had the sharp drop when the announcement came out, then two very indecisive candles that have pretty much gone nowhere. They're just trading sideways at about the same level as the first 5-minute candle closed at. And the USD Canadian, pretty much the same. It's gone up and is just hanging out at that level. So this doesn't bode well for dollar strength. It ran out of steam pretty quickly. And if anything, I think all these pairs are going to give you a pretty good opportunity, if you want to capture some pips, to just trade them right back down to where they were before the announcement. And on each of those pairs, you're probably able to capture a good 40 to 50 pips as it retraces, but too soon still. Like I said, I like to wait at least 15, 20 minutes after the announcement to figure out if I want to go in on a retrace. And while I'm doing all this stuff, I'm going to add a trailing stop here to my open trade just to make sure I capture enough of that profit there. On Friday, I tend to close any trades that I don't believe in for the long term, or I'm just trading on the week. So apologies for doing that housekeeping there. Anybody have any questions while we're waiting for the market to decide what it's going to be doing?
Yeah, if no one else has got anything to say, I've got a slightly strange point to make. I've got an open Euro JPY buy trade from a few days ago, and it seemed to really quite like that news, even though it should have been bullish for the dollar. Euro JPY went up on that news. It's quite strange.
Well, Euro JPY has nothing to do with the dollar, so it's completely independent. It has been trading up. It's the one I have on the screen right now. And it should continue to trade up until that trend breaks. It did break over here and then started following the underside of that trend line, and it's still up there. The JPY has been weakening. That's why we saw it weakening against the dollar. It's the only currency that has not strengthened against the dollar in the last week. And that simply means that the JPY is losing strength, and you can see that play out in this chart as well. And likely see it on all the JPY pairs are going to be trading towards JPY weakness at this point. So if you're long on this pair, stay long. Make a decision at the end of the day whether you want to stay in for the weekend or not. Personally, I would stay. This looks to be a good trade to continue going higher on two separate notions. One, we are in Euro strength, and second, it's obvious we're in JPY weakness at the same time. So you get a double bang on this pair, which is why it's been so aggressive since the 30th of January. It's just been trending higher. So I hope that answers your question.
Thank you. Yeah. Yeah, I think it's gunning for 140. I don't know if it'll make it, but I think this move is going to be a last gasp. I think we're going to see some correction upwards.
Yeah, I tend to not like limits too much because when you're in a trend, just follow the trend as far as it goes. I'm usually in no hurry to exit. Maybe on weekends, if I'm not comfortable with the market, I will exit on a Friday and then jump right back into the same trade on the Sunday Open, provided nothing untoward has happened. So I'll do that. But other than that, I have accounts where I let trades run for months at a time. So long as it is following a trend, let it run, no limit, a trailing stop at a decent distance behind it. When I'm leaving them open long term, my trailing stop is at least 100 pips behind. So it gives it room for slight retracements that don't break the trend. And I'll be monitoring at least once a week to see how they're doing.
But you do try and protect yourself against weekend black swan events just by closing out other trades.
Yeah, that's what I'm afraid of. That most governments take advantage of the weekend and the market close to release dire news because they know people are stuck. They can't trade out of the currencies or of anything else. So when I'm not that confident in what's going on, and it's not one of my long-term trades, I do tend to get out on the weekend and just jump back in when they open. I've lived through several of those. In particular, when I was much younger, I saw the Venezuelan government, and this was a strong Venezuelan government with a strong currency. This was back in the 90s, maybe late 80s. They devalued their currency 5-1, and they did it on a Saturday when the banks were closed. They pretty much just gave the finger to everybody. People lost millions, and they couldn't do anything about it until the banks opened on Monday. So I learned that lesson even before I was trading Forex actively, and that governments do weird stuff on the weekends.
Yeah, that's a very good point, Andy. Thank you very much for that. That's a good reminder. That's exactly the kind of black swan that we're scared of.
Yep, no problem, anytime. Guys, anybody else have any questions? Take advantage. This is absolutely free. Anything you want answered, we'll be happy to to field the questions. We will be doing another one of these next Friday around the same time because we have the Canadian government releasing their version of the NFP. It's going to be happening next Friday at the same time. So I will probably send another open invite for anyone that wants to join me in trading that one. We do have a Forex trading room that meets twice a day and also meets for special events like this one, and that is a paid service. I'm not trying to promote anything, just telling you guys that it's there if you want to take advantage of it, and you will find that information in the services section of our website at specialeffectsacademy.com. But again, this was meant to be a freebie, a promotion. I'm not trying to be salesy here, but if you are interested in joining us every single day, at least twice a day, as we trade the market, then you're certainly welcome to join us.
Yeah, thank you for that, Andy. Well, my trailing stops closed me out a bit early, but I've still made enough money to go diving a few more times in Thailand off that anyway. So thank you.
That's always good. I always say that any trade that takes me out at profit, whatever the profit is a good trade. I'll take that any day over the opposite, having a loss.
Yeah.
So hey, no problem. Callum, over there in Thailand, were you trading?
Yeah, I certainly did.
How'd you do?
Pretty much the same as Angus, really. I got taken in. I didn't get taken in out quite so early as Angus, but yeah, I got taken out.
Yeah, neither did I. I survived in that trade longer than Angus. I think I took 20 or so pips, which is still a good day. Good hours work.
Yeah, I think what you need to do, Angus, is have a look at the small print on ETX, because I do seem to remember they like widening their spreads on any news announcement. So that's probably why
Callum,
you got taken out.
They definitely do that. I've had words with them a few times, and I've sent them screenshots and taken them to task on a few things in the past, and actually had them refund me on a few trades because it's just been outrageous what they've done. And
that's a really good point. That's a really good, because I've seen brokers do that, and it's about the shadiest operation without actually breaking the law. So yeah, you definitely want to take a look at what your broker is doing, and there are brokers that definitely don't operate that way, and you can use from anywhere in the world. So shop around. Don't get locked into a broker that's treating you poorly.
Totally agree with that. Don't think it's a hassle to open up a new broker, because it certainly isn't.
It's getting easier every day.
Yeah, I think it's going to be something that us folk in the UK are going to have to look to do anyway, because the financial services have triggered something called Article 40, which is quite an extreme measure where they're trying to drastically cut the amount of leverage that is given to retail traders, that haven't got any kind of financial experience or financial accreditation. And I guess they're trying to protect the 90% of retail traders who lose money and who lose their accounts within a year or whatever the statistic is. But I still want to have more leverage than they're going to. So yeah, I'm going to have to look to open another account somehow.
Well, you guys are spoiled outside the U.S. We're capped at 1 to 50 leverage. Nobody can offer us anything higher by law. Whereas in outside the U.S., I know you get 1 to 100, 1 to 500, and even 1 to 1,000. Though I wouldn't necessarily trust the brokers offering 1 to 1,000. I haven't seen even one of them where there's not this huge hassle if you actually make money and try to withdraw your funds. I've heard horror stories. Okay, so it is now 5 minutes to 9. All the pairs that I've been looking at seem to be hanging out at whatever level they stop moving at. So nothing much happening. If I could give you guys a tip, if you're going to be continuing to trade throughout the day, I would not expect this to continue moving any deeper into dollar strength. The market is obviously unconvinced, and since it is a Friday, round about noon my time, so noon Eastern time, 5 p.m. London, when London closes, these will start retracing if they don't do it before that. And you can capture pretty much the same amount of pips. It will go up more or less to where it was before the announcement, because obviously there wasn't any strength and the market didn't take the news as well as we might have expected. It simply stopped. As you can see, it's not moving much. So the retrace will happen. Check it out. By the end of the closing day, I would be very surprised if all of these are not back to the top of this long hourly candle, which is where it all started. And that's about, between the 4 pairs, you got about 200 pips of movement there. But I would wait to see confirmation that it is starting to retrace before I put money in, because if I'm wrong, I don't want to be wrong by 200 pips. Okay, at this point, guys, that's pretty much it. I do thank you for joining us. I am sorry it didn't move as much as some of these move. This is just a matter of keep showing up. If you show up to every non-farm payroll every first Friday of the month, even if you just trade it the way I traded it today, that's a freebie there. Put a collar around the price right before the fundamental, 20 pips above, 20 pips below, both buy and sell, and do a trailing stop at 15 pips. You will eventually catch one of these big moves. And when that happens, it may make your month, even make your quarter, just by the amount of pips you can capture in the space of a few minutes. Okay, these are starting now to retrace to a significant degree. Let's take a look at the Euro USD on a 5-minute chart and see if we can look at a trend line. I'm going to be, first off, canceling the two pending orders that are still alive. And guys, make a habit of that. Never walk away from your console with a pending order in place that you really don't want anymore, because you may be in for dire surprises. Okay, so what we have here is, as I said, a retrace, but it's been a weak retrace. It's gone up and then back down. So you will see the retrace when it starts happening. It will happen. You will see it clearly on the 5-minute chart. And I would say that an entry somewhere around the middle. So let's call it about 20, 30 pips above the current price in the case of the Euro USD would be a good enough entry for you guys to capture about another 30 to 40 pips as it does its retrace. And multiplied by 4, if you're trading all 4 pairs that we covered, that's 120 pips. So it may still turn out to be a very good day. But you can see a new candle opened and now it's going in the opposite direction. So we definitely need to wait until we see that the retrace has started. Don't jump into this one early unless you enjoy living dangerously. It could still go either way. All right, again, thank you everybody for joining us. If you want to join us on every session of our Forex trading room, Again, go to specialeffectsacademy.com, browse to our services, and you will see the link to sign up. We would love to have more people there, and you will always have access to these sessions, not just when we decide to open it up to really get to know some more people. We always like to talk to new traders and get to know you guys. Any last questions, comments? Anybody have anything before I close this session down? Okay, then thank you very much. And I will probably be sending an invite out for next Friday when I trade the Canadian, just because I want everybody to have a chance to make a nice amount of pips. And while we did profit today, it wasn't as big a win as I'd expected, and I want to give you guys something to brag about. So thanks again for joining us, and I will catch you next time. Bye-bye. Have a great weekend.
Thanks, Andy.
You're very welcome.